All right, let's talk about Palantir. If you're an investor, you know it's been one heck of a ride. I mean, if you're sitting on those massive gains, congratulations, you've done incredibly well. And if you've been gritting your teeth through some of these recent dips, yeah, I feel you. So today, we're going to cut through all that chaos and get to the real story behind this really fascinating and, let's be honest, pretty controversial stock.
This slide just says it all, doesn't it? You've got this incredible 143% gain just this year, and then bam, a sudden sharp 7.5% drop on a single day. So what's the real story here? Is this company a revolutionary force for the future, or is it just an overhyped stock that's waiting to pop?
To figure that out, we're going to break this whole thing down. Think of it like a puzzle. First, we'll look at the engine, what's making it go. Then we'll get into the hype. After that, we'll cut through the noise and the rumors. We'll see what Wall Street actually thinks. And we'll finish up with a little playbook for your next move. Okay, first things first, let's look at the fundamentals. What are the actual, concrete reasons this stock has been performing so incredibly well? Man, it has just been a whirlwind of good news lately. In just the last few weeks, Palantir got added to the S&P 500. Now, this is a huge deal because it basically forces a ton of big investment funds to buy the stock. Then, they celebrated their 5th anniversary on the stock exchange, they locked in a massive contract with the UK's Ministry of Defence, and they raised their own expectations for how much money they're going to make. Each piece of news just built on the last, creating some serious momentum.
And this number, this tells the long-term story. Since Palantir first went public 5 years ago, its stock price is up a staggering 1,700%. This isn't just some flash in the pan. This has been a multi-year growth story that has made a lot of early investors very, very happy.
But here's the really interesting part. Where is this growth actually coming from? You know, most people think of Palantir as this secretive company working for the government. But check this out. Its U.S. commercial revenue, that's business from regular companies, exploded by 93% last quarter. That shows they're successfully moving their powerful AI tools into the private sector.
So the crucial point here is that it's not just one thing. You've got strong earnings. You've got the steady government work. You have companies jumping on board their new AI platform, or AIP, and you've got these huge partnerships with giants like Boeing. This is what it looks like when an engine is firing on all cylinders.
But, okay, beyond the solid numbers, there's this massive amount of hype around what Palantir could become, especially with the whole AI revolution kicking into high gear. And this, my friends, is where the story gets really exciting and maybe a little crazy. Just listen to this prediction from the well-known tech analyst Dan Ives. He's talking about a potential $1 trillion valuation in the next couple of years. His whole point is that Palantir isn't just another company. He's saying they're playing chess while everyone else is playing checkers, making these big strategic moves that nobody else even sees yet. Now, to get your head around a $1 trillion forecast, you have to understand this analogy. Ives says the AI revolution right now, it's like we're building all the roads and power grids for Las Vegas, but none of the casinos or hotels are there yet. We're just laying the foundation. The real explosion in value, that's still to come. And this chart right here shows you exactly why analysts are so optimistic. Right now, only about 3% of corporations in the US have really adopted AI. That leaves a massive 97% untapped market. If you're a believer in Palantir, you don't see that as a bad thing. You see it as almost limitless potential for growth as that number climbs higher and higher. Okay, a $1 trillion valuation sounds amazing, but let's get real for a second. Nothing goes up in a straight line forever. So what about the downsides? What about those scary headlines that caused that big drop we saw? This is a perfect case study in separating the real signal from all the noise. A Reuters headline starts screaming about fundamental security issues. The stock tanks. But what was the reality when you dig in? Well, the memo they were talking about was a month old. The issue had already been fixed. And the problem wasn't even in Palantir's main software. It was apparently linked to a third-party part. It just shows how a scary headline can create a panic without telling you the whole story. The other major risk here is the valuation. Palantir's price-to-sales ratio is over 130. Let me put it this way. For every single dollar the company makes in sales, the market values that dollar at $130. Now, for perspective, a ratio over 10 is often considered pretty high. This means the stock is what we call priced for perfection. Any little mistake, any tiny hiccup can cause a huge drop because all of that future growth is already baked into the price today. So let's just recap the risks here. You've got that extremely high valuation we just talked about. You have this vulnerability to wild swings just based on a single headline. There's always the risk that their amazing growth could start to slow down. And you're definitely starting to hear more and more people use the word bubble. These are all serious things any investor has to think about. So, with such a strong argument for the stock and an equally serious argument against it, where do the professionals on Wall Street actually land? Is there any kind of consensus on whether this thing is a buy, a sell, or a hold?
Well, the short answer is no. There is zero consensus. This slide shows just how split the experts are. You've got a handful of bulls screaming buy and an equal number of bears yelling sell. And then you have the vast majority right in the middle with a hold rating. It's like they see the massive potential, but they also see the huge risk. But here's the most telling detail of all, in my opinion. The average price target for the next 12 months. At $153, it's actually below where the stock is trading right now. So what that means is, on average, Wall Street pros believe the stock is overvalued in the short term and is probably going to pull back over the next year.
Okay, we have looked at the growth, the hype, the risks, and the totally divided opinions. I know, it's a lot to take in. So how can a regular investor make sense of all this and figure out what to do next?
Here's a simple 3-step playbook. First, always verify your sources. Like we saw with that Reuters story, the headline is almost never the full picture. Second, maintain a long-term view. Ask yourself, are you investing in the daily stock price? Are you investing in the company's potential value 5 or 10 years from now? And third, if you really do believe in that long-term story, you can start to see all this noise and panic selling not as a threat, but as a potential buying opportunity. That's how you can turn market fear to your advantage.
And really, it all comes down to this one crucial shift in your mindset. Try to focus less on the daily up and down of the price and more on the underlying business itself. Do you believe in its tech? Do you believe in its strategy and its place in the market for the long haul? And that brings us to our final question, the one that you have to answer for yourself. After seeing the incredible potential and the very real risks, you have to decide, is the promise of Palantir's future worth the price of its volatility today?